Good morning, everybody. It's Tuesday, August 15th, 5:29 a.m. Central Time. Lower trade in the grain markets. December corn futures down 5 at 482 and 3/4. November soybeans down 6.5 at 1319.5. December Chicago wheat down 6.5 at 635. December Kansas City wheat down 1.5 at 757 and 3/4. December spring wheat down 1.25 at 818 and 3/4. What are we going to lead off with today?
So, we're going to talk about China. Heavy rains have caused devastating floods in some of China's top producing rice areas. Global rice prices are already at their highest point in 12 years, but are expected to climb higher. The floods are impacting China's northern and northeastern regions, and the country will most likely need to increase rice imports due to reduced yields. China is also expected to increase corn and soybean imports due to floods impacting those crops. A few other factors that are impacting global rice prices include India recently banning some rice exports, and Thailand has recently urged farmers to plant less rice to preserve water due to the drought that they are dealing with.
Okay, we don't do the rice market here. It's been strong, whatever. Couple of things. So the flooding's been there was some flooding in late July, early August around Beijing, like south of Beijing. But you've got these north and northeastern provinces that have had some issues, and that's corn country for sure. USDA, I've got a bunch of notes here. USDA did acknowledge a smaller crop in China to some point last week. They took their crop estimate from 280 million metric tons down to 277. So that's a reduction of like 1%. Some of the analysts that the news wires have cited, we're talking like maybe 4 or 5 million metric tons. In any case, you're not talking about a huge amount. Now, the corn market in China has reacted positively to this. This chart on my screen is Dalian corn futures, which is China's futures market, basically. And you could see we started to rally. The market started to rally as these rains hit in late July and into early August. What you're going to need to see, you'd like this to be a positive price mover for U.S. corn prices, right? If you're going to, if that is to be the case, you're going to need to see China buy some U.S. corn, would be my guess. And to this point, China's bought next to nothing in terms of U.S. corn for new crop delivery. They've bought a total of 272,000 metric tons, which is like nothing. They had almost 3 million on the books at this point last year. So Chinese purchases of new crop U.S. corn are down like 93% versus the same period last year. They've bought nothing. But you could make the case that if the Chinese government and USDA is downplaying the damage, that some demand could come to the United States because U.S. corn, given this recent break in prices, it's become competitive on the export market. And, you know, that deficit versus last year, it's almost 3 million metric tons or a little bit less than that. I mean, that could be made up in like 2 flash sales, right? You get 2 big flash sales to China, 1 million here, 1 million there. It could all be made up really quickly. We just haven't seen it yet. If those flash sales do come, the market will, in all likelihood, move higher before the flash sales are even reported. That's kind of how this thing works. So it's a story to keep an eye on, but not anything that appears to be moving the U.S. market right here, right now.
U.S. soybean ratings saw a drastic improvement. The crop was rated 59% good to excellent nationally compared to 54% last week and 61% on average. Illinois is the nation's top soybean producer and saw the biggest improvement of any state last week. USDA estimates that 78% of the crop is setting pods nationally versus 66% last week and 75% on average.
I am surprised the bean market's only down 7 cents this morning on this rate. That's a 5% jump in the good to excellent category. Look at Illinois. Illinois soybean ratings bottomed at 25% good to excellent in late June. They were 70% good to excellent yesterday. They increased 12 points on the week, and that was following a 12-point increase the prior week. So you've seen a 24% increase in the good to excellent category for Illinois soybeans just in the last 2 weeks. This is phenomenal contra-seasonal stuff, especially for Illinois, but just in general, it's really not normal to see crop ratings improve in mid-August. I mean, typically as the crops mature, the ratings decline, but this year has been kind of odd. So yeah, I guess I'm surprised by the way that the bean market's acted. I felt like it could have been worse, but we do have some weather that looks kind of threatening. We'll get to that here in a minute. What about corn ratings?
They also improved. The crop is rated 59% good to excellent nationally compared to 57% last week and 63% on average. States with a good to excellent rating of 50% or below include Minnesota, Kansas, and Missouri. The Illinois crop is now rated 64% good to excellent after bottoming at 26% in late June. USDA estimates that 18% of the crop is denting compared to 18% on average.
Illinois was up 6% in the good to excellent category in corn. Michigan was up 8%. I think that was the best improvement, up to 54% from 46 the prior week. So the ratings, again, contra-seasonal improvement in corn and soybean ratings is kind of the deal here. And the markets, I mean, yeah, we're down this morning, but I feel like in the case of beans, it probably could have been worse.
So if you guys are not already subscribed to our premium content, you need to do so. You're not going to find content like this anywhere else. Joe, can you tell me about the video you put together yesterday?
So USDA put a report out on Friday with new balance sheets, right? What I do in these balance sheet review videos is I run through the USDA balance sheets, and I've got a free, like, real simple tool that I make available to the subscribers. You can go in and punch in your own yield numbers and figure out what it means for carry out, that sort of thing. But what I tried to do was take current carry out levels or projections, current stocks to use ratio projections, and pair them with like historical pricing. Like, okay, the current stocks to use ratio is this, that equates to this price historically. We did that for corn and for soybeans. I do this fairly often, and especially when USDA releases a new set of numbers. Also, we had that grain storage video, fall storage practices, I think we called it, something like that, with Chris Barron last week. When you guys sign up for the premium deal, we send you the 6 most recent premium videos and then anything else on request. So go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Takes like a minute to sign up on your phone or computer. Check it out this morning, guys.
Forecasts for the U.S. Corn Belt remain dry. The majority of the region will see little to no rain over the next 7 days. The 10-day Euro and GFS models are also dry. Even the extended GFS run through August 31st offers only minimal rainfall for the region. Above normal temperatures will be seen in the west this week and will hit the central Corn Belt by this weekend.
This may be why the bean market is acting not so terribly given the surge in ratings. Its forecast doesn't look great. So a lot of areas did catch rains and substantial rains during the first part of August. But if you're in an area that did not catch those rains, and even if you did catch them, I mean, this forecast is not totally ideal, I don't think, especially if you miss the rain. So maybe this forecast, kind of a hot and dry type deal to finish out the month. Maybe this is part of the reason that the bean market has been able to hold up the way that it has.
So U.S. winter and spring wheat harvest continue. The U.S. winter wheat harvest is 92% complete versus 92% on average. The spring wheat harvest is 24% complete versus 28% on average. Spring wheat ratings improved to 42% good to excellent nationally compared to 41% last week and 58% on average.
Nothing exciting here. Wheat harvest moving along as it should. Spring wheat rating still well below average.
USDA reported a flash sale of U.S. soybeans to unknown destinations on Monday. U.S. exporters sold 416,000 metric tons of soybeans to unknown destinations for delivery during the next marketing year. This is the 4th flash sale of soybeans since the beginning of the month, totaling 933,000 metric tons.
All right, let's go. This is a better number, 15 million bushels. This is one of the better ones that we've seen, if not the best one that we've seen as of late. Unknown destinations, is that China? I don't know. It doesn't really matter. But in any case, this is good. We need to see a lot more of this. U.S. beans are competitive in the post-harvest time slot. You get out October forward. So we should see more of this, and we need to.
U.S. corn shipments improved marginally last week. USDA reported that 398,269 metric tons of corn were inspected for export during the week ending August 10th. The print was up 2.7% on the week, but down 26% versus the same week last year. Accumulated sales are running 33% below last year's pace. Soybean shipments declined 4.7% from the previous week, totaling 297,797 metric tons. For the second consecutive week, wheat shipments fell below analyst estimates at 183,289 metric tons, down 37% compared to the previous week. Analysts had pegged those shipments to fall somewhere between 275,000 metric tons and 550,000 metric tons.
We've got like 2 weeks left in the old crop marketing year. You aren't going to see anything really stellar in terms of corn shipments until we get into that post-harvest window. It's usually like late October, November. You start to see things pick up, and then you see your seasonal surge after that. So we're going to kind of go out on a whimper here in terms of this marketing year and corn shipments the way that it looks.
NOPA will release July crush data this morning. The U.S. soybean crush is expected to increase in July after a 9-month low in June. NOPA members are estimated to have crushed 171.3 million bushels last month. If realized, the July crush would be up 3.8% from June and up 0.7% compared to July of last year. Additionally, it would be the second largest July crush on record behind 2020. The estimate implies a daily crush rate of 5.527 million bushels, up from 5.501 million bushels per day in June, and the first increase in 4 months.
So you're looking for a good crush number. You're going to continue to look for good crush numbers moving forward, given all this expansion in U.S. crush capacity. We had a pretty solid looking export sale for new crop delivery. So soybean demand picking up a little bit the way that it seems, given these lower prices, which is absolutely a positive. Cattle market was a little bit lower yesterday.
Yep, feeder cattle futures closed an average of 108 lower. They were anywhere from 80 cents to $1.52 lower. Live cattle futures saw an average loss of 61 cents, ranging from 47 cents lower to 50 cents lower. Box beef had a positive day on Monday. Choice ended the day at 305.50. That was up 2.89. Select ended the day at 280.45. That was up 3.22.
We have some movement in the outside market this morning. U.S. dollar's off a little bit. Stock market's getting beat up. The S&P's down 28. Dow Jones down 225. Bonds are off. Crude oil is down 66 cents, and the September WTI at 81.85. Have a great day, guys. We'll talk to you on Wednesday.